Hello, welcome to our podcast. I am William Swanson. I am a coder, a engineer kind of guy here at Edge Wallet.
And just a coder and engineer. The guy that kind of makes a lot of the tech happen here at Edge. Everything from our security architecture to many aspects of blockchain as well, especially back in the Airbit days.
Yeah, I used to do a lot more blockchain.
A little more blockchain, but it's still there. It's still there for sure. I'm Paul Poi, CEO and co-founder of Edge, and so here's our live Q&A this Friday, as we do every week. Thanks for joining us. Here to answer any questions you guys might ask live, as well as answer the questions that come across our plate over the course of this past week. And it's been quite a lot's been happening this week, actually.
It's been an interesting week.
It's been a very interesting week. A little bit on the tech side, but definitely big on kind of the news, industry events, regulatory stuff, which usually I'm not excited to talk about, but I'm kind of somewhat excited to talk about some of this stuff because it's relevant to us and other companies that we partner with. And the top of this list is the Fincen Guidance that just kind of recently came out. And this one kind of, to a lot of people, is kind of a drop of a bomb that kind of came out of nowhere. In some ways, good bomb. In some ways, bad bomb. And I know it's very relevant for a lot of companies in crypto. It's very relevant for us. And if anyone hadn't seen, definitely follow Marco Santori. He put out a giant tweet storm kind of outlining his take on the Fincen Guidance. But
so who is Fincen?
Fincen. God, we're acronyms in the U.S., right? Everything's an acronym. The country's an acronym, and so is every department. So the Financial Crimes Enforcement Network.
That sounds relevant to many U.S. companies.
Very, very relevant, especially anything to do with money in the U.S. So they're less concerned about things like, oh, are you a security or not? But more, hey, are you facilitating crimes via money?
Got it.
And so that's what they're most interested in. And they tend to, obviously, with the sake of money transmission and licenses, they're very relevant there. And they determine what types of companies are regulated companies versus not. Are you an Uber that basically connects people via a car or a scooter company, or are you a company that accepts payments, connects with banks, and transmits money over borders?
I see. Because obviously lots of companies deal with customer funds, but they're not necessarily financial transmitters.
Usually most companies don't deal with what I'd call customer funds. They deal with accepting payments for a service.
Right. And you may have that as like an intermediary, but like your provider is not like,
Yeah, you go through a payment processor, which then falls under more money transmission type of licenses or payment processor licenses. So the one good thing that really came out of this Fincen Guidance was that non-custodial wallets are not money transmitters in the U.S. And this is something that we've kind of already felt for a long time, but they just really confirmed it. And that the software, open source wallets are effectively unregulated, and they can continue to stay that way. And so this is awesome. This is obviously what we do at Edge. It's what a lot of different companies in the crypto space build, and it shows the power of building this kind of a solution versus what a lot of people kind of say, oh, the user experience is tough, so I'll just kind of go down the custodial route.
Well, that's the thing. It's so easy to go onto a place like a Coinbase, set up an account, buy crypto right there with your credit card, and just have it sit there. And they've got your storage, they've got your purchase, they've got your selling. Everything's all wrapped together into one nice little package.
Right.
And you've got a familiar username and password.
Right. And even in some cases that aren't like the typical Coinbase, you can buy, sell, hold, we've seen examples of custodial solutions, even in the era of what a lot of people think of as our normal open source wallets. So as an example, one that is widely used, especially in the, I should turn my little volume down here, especially in kind of the Lightning world, was a Blue Wallet, which does offer a non-custodial solution to access the Lightning Network, but most people use the custodial solution of Blue Wallet because it's significantly easier. It's hugely easier. And one of the challenges that it is, somewhat challenging to do a non-custodial Lightning wallet today. Of course, that's, in many people's eyes, hoping to improve. But if you're driving people to the custodial solutions, you may end up with the type of regulated and very unprivate solution from a company that falls under this Fincen Guidance of, well, yes, you are now a money transmitter and are regulated. So we try to say, people think that this self-custody, control your keys is a kind of an ideologic thing. I think we're going to see over the next 5 years, it's less ideologic, but actual usability. It really, really affects the product.
Are you going to have to fork over your driver's license and your passport and get approved in order to use Blue Wallet?
And exactly.
And the answer seems to be from Fincen, yeah.
Yes, you'll have to. But what's more interesting is not just that the non-custodial wallets are fully just kind of unregulated, they just kind of do what they need to do, but what now is required of the custodial solutions that are money transmitters and that are regulated. This is the bomb that effectively was dropped.
So it's good news for us because it confirms what we already believed, but now something else is changing.
Correct, right. Is now if you offer services that are custodial or have money flow through you, and once again, this guidance wasn't 100% clear, but there was a strong implication that those services effectively now need to not just collect user information, but need to connect between all of the other regulated services and create a network not unlike SWIFT to be able to, or to be required to send the personal information between all the different entities. So if, for example, I was with let's say that was a Blue Wallet and I was sending money to a Kraken, I would actually have to send the personal information, my personal information, along with the transaction over to Kraken.
Ooh.
So it's not just that the provider has to collect it, but they actually have to send it with the transaction to the receiving party. So much like if you do a wire transfer, that receiving bank actually gets a lot of the personal information of the sending party. And that's an interesting measure that we hadn't really heard about before.
So now what we're talking about is actually sounds like this regulation, this guidance that just came out, is that now we're going to have to build a technology where every Bitcoin transaction on chain has to have some according privacy transaction off chain, which is like Kraken telling Coinbase, this money belonged to Joe, whoever.
Correct. And there was that. There was a portion of that guidance that said a network between all of these regulated services will have to be created to be able to transmit this KYC information between themselves, which definitely doesn't bode well from the viewpoint of course, what we care about is privacy. And it's funny thing is that, we've been believing in privacy for years, but I've always kind of had this sinking feeling that a lot of the world just kind of doesn't care, which is unfortunate. But ironically, I was reading something recently from, I don't know if it was Y Combinator, one of the blogs of an accelerator in the Bay Area, and they said that in 2018 was the year of privacy tech, where it wasn't AI that was talked about and blockchain and whatnot, but it was suddenly all of the Silicon Valley companies had to have some angle of privacy, and there was a huge amount of investment in companies where that was just the core focus, to deliver privacy into other aspects of tech. And so this goes backwards.
You definitely kind of feel the whole vibe of like, I don't know, Facebook and Google are kind of creepy with all my personal information. And I kind of feel the backlash. I mean,
no, there definitely has been a good, strong backlash.
I'm a dad. And I was just talking to my wife the other night about, do we want to have our son's photos appear online? And I think the answer we came to was, no, we don't. We would actually rather have the grandparents and so forth avoid posting baby pictures. Just because we're worried about that sort of thing. And that's just as parents. It's not as like a blockchain developer.
No, exactly. Yeah, he can make that decision for himself when he gets to that age if he wants to be kind of seen and whatnot. So it is definitely a question that's asked more and more, but this Fincen guidance would make it nearly impossible to retain any level of privacy.
As long as you're using custodial services.
If you're using custodial services, like your information will go from one custodial service to another, to another, to another as you make these transactions.
Well, what happens, I guess, I don't know how much detail they go into on this, but what about overseas exchanges? Like if I transfer from Kraken would be a U.S. exchange to like Coinex is a China exchange.
And I think one of the challenges, so there's the clear-cut parts of, okay, so this is a U.S. piece of guidance, and there are companies in the U.S. that are custodial, and then there are companies that are non-custodial. And so you know what the non-custodial ones can do, and you know what the custodial ones can do. You bring up one weird corner case, and then to me, the other weird corner case is what happens if you cross between custodial and non-custodial, right? So does Coinbase necessarily know that this address is owned by a regular wallet or some random exchange that's rotating tons of addresses, and suddenly they now need to send over the personal information there?
I would assume that whatever this SWIFT network is, these regulated exchanges would have to declare these addresses are ours.
Right. And so I imagine they can't enforce this over water. Right?
Probably.
They can't over water. Of course, you can cross borders without water. We in the U.S. we say overseas a lot because once you cross the seas, then you really get out of the country. But I imagine they wouldn't be able to easily enforce this everywhere else. Like it wouldn't be something that's globally enforceable. And so would that effectively limit your ability to send money from one exchange direct? Like say you bought some crypto with Coinbase, now send it over to Binance.
Right.
Like would that now would be possible, or would it be restricted? And the thing is, if you don't enforce it overseas, then how is Coinbase supposed to know whether an address is from one of these regulated exchanges or not?
Yeah.
You know,
There's a lot of questions. It almost raises more questions than answers.
it totally does. Yeah, it does.
But at least we know that if you have your keys and your coins are on your keys, and that's in a piece of software that you just download, that you're good.
Yeah, you're good.
So that's our thesis, and that's great that it's been confirmed. So go Edge.
Right?
Right?
We're happy in that regard, and go Edge and all the other companies. This came from Marco Santori, who's I think chief compliance or main legal for blockchain.info, and he mentioned Ledger, Bread, all those companies that we've been building alongside. All of us are in the clear in that sense. So we're happy about that.
That actually brings us to the next kind of point about Edge, though. We're actually building the Coinbase experience in our app.
Right.
For years, we've had the convenience of the username and the password and kind of the familiar sign up.
Right.
And now that we've gotten who's doing Sell?
Simplex.
Simplex. That was the announcement you sent out. I'm just asking.
Yep.
Yeah.
Yep. So we were integrating it in beta with people testing today in Europe, being able to sell crypto into their credit card. Right now it supports Visa in Europe, and I just heard I think UK is partially supported, but there's a little bit of an extra fee to convert to pounds versus euro. But you can now sell right into your credit card, and we're hoping that expands to the US quickly as well.
So you can buy in the app with the credit card. You can sell in the app with the credit card, at least for Europe now, in beta.
In beta, exactly. So we're still testing it out, ironing out the kinks. And this is an interesting piece because this crosses over, and I'm interested to see how kind of Fincen handles this, but this crosses over the non-custodial versus the custodial services.
Right.
Now, Simplex isn't a custodial service, but they are a service that connects to exchanges, which are centralized and custodial, to send and receive the crypto. And so what type of regulations are those services going to need? Now, they're sending to a non-custodial wallet when someone buys crypto and receiving from a non-custodial wallet when someone sells crypto. So they can't really enforce any of this kind of swift KYC network.
Well, I mean, you could say that Simplex needs to talk to the bank when they send the money to the bank. And if you sent money from Coinbase into Simplex, if you just use their website or something, not like integrate. Do they even have a website though?
I know Simplex. They have so many integrations. I can't think if they actually have a website.
I know Glidera, our old partner, who's now defunct. Yeah,
yes.
They used to have a website where you could also send. So I imagine if you went straight from like a Coinbase to Glidera, straight, that they'd have to have that regulated, and then from there to your bank account.
Correct.
Edge on that side, I imagine that wouldn't be regulated.
That's what I imagine too. And I think what really comes to mind is the irrelevance of this regulation when you think about the tech can cross over between these regulated versus unregulated. And so how relevant is it for you to collect this information from the regulated when it can just easily flop around into the non-KYC domain?
Right.
And my hope is in 5-10 years we realize that a lot of this is irrelevant and that there's other ways, and we should target other ways of getting the bad guys. And that the financial tracking just ends up, when you financially track 100% of the population to be able to catch the sub 1%, then you're burnt just on tracking everybody to be able to capture the minority. So hopefully other aspects of technology are used and financial tools aren't necessarily what are hindered in that process. But this is an interesting kind of advent. Just came out, I think it was just yesterday, or at least Marco's tweet storm just came out yesterday. Thanks, Marco, for those updates. Kind of read through and gave us a good understanding without having to look through the ugly legalese of the actual Fincen Guidance, which I did look through, but wasn't fun to read.
What else can happen to your money?
Yeah, exactly. Yeah. So next up, on that note about making sure you hold your keys.
Oh, I should also segue and say, if you guys have questions, anyone who's out there watching, feel free. They'll come to us, and we'll try to answer them as they come in.
Yeah, exactly. So we are streaming on Periscope, on Twitter, as well as on YouTube, and so keep an eye out for any questions on those channels.
So our news story: what can happen to money on exchanges?
Yeah, it's almost like it's been talked about so much. You feel like, do we really want to mention it again?
Another one, whatever.
Yeah, another one. And I think I'd mentioned this on another Friday Q&A, but I had used Augur, for actually putting in a bet on a market outcome, and the one market outcome that I'd put a bet on was whether or not an exchange would get hacked before the end of 2018 for over $10 million worth. I put that bet in, I think, in June, and within a couple of months, I can't remember, something maybe out of Korea, got hacked. And so this is pretty much a surefire bet that it'll happen at least every quarter or two a year. Now, I will at least give.
So at least this time, really
Yeah.
the news item is not that an exchange got hacked, because that happens all the time. It's who and how much, right?
Right. So you want to give the little update for those that don't
So
weren't aware?
it was Binance, big exchange, and,
Huge exchange, yeah.
and the amount was $40 million.
40 million.
7,000 bitcoins in one
Yes.
shot.
Not a small amount, not a giant amount. We've had much bigger hacks in that sense, but definitely not a small amount. And hard to say what that kind of does to Binance's bottom line, but I'm guessing they'll still be okay. They're, being one of the biggest exchanges in the world, probably have a good, war chest of funds. But it's concerning on less the front of people losing funds.
Well, they say they're actually going to make good on it.
Yeah, they're going to make everyone whole. They will make everyone whole. But now the question is is the model of hosting a centralized exchange sustainable long term? Long term, can we actually have these centralized exchanges existing and operating as they currently do, holding the funds, or will insurance cost too much? Like, you can't. Is anyone going to insure these funds long term? Because as they see more of these hacks, these insurance companies just simply say, "This is just too costly."
Well,
Like,
what's going to happen is, as time goes on, right now exchanges are making tons of money because it's brand new and they're in demand and they're hot. But as time goes on, that's going to be less and less profit, because there's going to be more exchanges. They're going to be squeezed out. It's going to be cut down. And then your ability to not get hacked is going to be the difference between profitability and improfitability.
Right.
And so an exchange that can find a model where they don't get hacked is going to just prosper in a way that the others won't.
Interestingly enough, you could also figure that if there's a certain expectation, just like insurances do, there's a certain risk and expectation that you may get hacked. Like, you call that the 0.0 something 1%. And you know roughly how much that will be for, because say that's your hot wallet. You can fold that into the price. And ironically, centralized exchanges have been the cheapest way to trade crypto.
Right, because you don't have the on-chain transactions.
You don't have the on-chain transaction fee. In a way, there's less risk for the exchange, because you would have had to deposit money and let it sit there for a while, then trade it, and you can't withdraw it. They're not the kind of shapeshifts or the simplexes of the world that have to take a lot of financial risk. So they're going to be able to charge a much lower fee. But might that start changing in the future?
As that percentage goes up.
As that percentage goes up, because of the substantial risk that they're taking, where the non-custodial, more instant exchanges take such a smaller risk, and therefore they can effectively start reducing their cost, maybe get insurance on their operations. Like, Shapeshift had gotten hacked a couple of years ago. They announced it, did a full blog post, about it, and realized that none of their users' funds were affected. It was a small amount of theirs, and they don't have to keep a lot of funds to begin with.
Right.
Because they can effectively tap into liquidity from other places, such as the exchanges. And so it does start to beg the question, is how sustainable are those services long term, or will they be as big as they are today, or will they be a much smaller part of our ecosystem?
I have a feeling there'll always be a space for them, but it may be a specialist product, like the day trader thing versus.
Yeah, exactly. Yep. They'll be for the people that go and move, really close to New York and wire right into NASDAQ, like those type of high frequency traders. But then the kind of average Joe, the person that might use an E-Trade or a Cash App type of app.
Just hold your own money in your own wallet and use a Shapeshift or one of those kind of partners. Well,
exactly.
Yeah.
Now, with respect to the Binance hack, actually, you guys just brought me, I think, up to speed on, at least some other folks in the office, a discussion that had ensued due to the Binance hack. That was a really fascinating one between, I think it was Adam Back and CZ from Binance.
Oh, yes.
The big question of, well, it's a blockchain, and, there's thousands of people that could agree to do something that rewinds bad events.
So that is, I don't know what to think about this. Obviously, it's not going to happen. There's no way on earth that you roll back the history of a giant coin. Right, the biggest coin that we have yet. But that is the discussion that's ensuing is, can we, or is there a way to get a majority of miners, nodes, whatever you call the balance of power in Bitcoin, to actually roll back the chain, reorg it, and return the money to Binance? Now, I personally think no way in hell. Yeah.
Like I just don't even think it'll happen. Now that doesn't stop someone from forking Bitcoin. I mean, we've seen this happen before with Ethereum Classic.
Right.
Where you fork the chain and suddenly, you've got one chain that's got the money with the hackers and one chain that doesn't, and we'll see which one people like. It didn't bode well for Ethereum Classic long term.
No.
Might be an interesting pump and dump opportunity in the short term. I know a few
it does
people.
raise an interesting question for Ethereum had this happen. They had the DAO.
Right.
What was it, like an $80 million, $60 million, something like that? It was a similar size chunk of money.
Correct. Yeah, and they rewound it.
But it was earlier on in their history, so they were a smaller coin. It was a much larger percentage of the value of that coin.
True. So you had this huge amount of value of the coin sitting with hackers that might be significantly motivated to just simply dump it on the market.
So what they did is they actually didn't rewind the chain. They actually hard forked in a way that made those transactions invalid.
Correct. And you can do that specifically on Ethereum, which you cannot do on Bitcoin because you're of this account-based architecture.
Totally could. You could totally hard fork the chain and just say, we're just putting in a consensus rule that says this Bitcoin address is not spendable, period. For no reason other than that we said.
I see. To make that right, you change the rules as opposed to rewinding the history.
Yeah.
So that way all previous transactions are still valid except for anything that comes from that one address.
Heck, you could even do it as a soft fork. Because something that was valid.
It's no more strict.
Yeah, it's more strict.
It's more strict. So it's true. You can't do this as soft fork. It'd be interesting if that discussion ensues.
Yeah, because Bitcoin does soft forks all the time. Now,
Correct.
it would be a scramble to get the technical software written and tested and developed in time. But you could do it as a soft fork as opposed to rolling back. Because what's going to happen is if you say, okay, we're going to roll back time as if this transaction never happened, then that's going to roll back all time.
Everyone.
Every transfer you made to buy a stick of gum or whatever it is you do with crypto on Bitcoin, well, no one buys sticks of gum on Bitcoin anymore.
Unless it's a $50 stick of gum.
Yeah. All those transactions would be wiped out, and that would be really bad for all the other exchanges who would lose tons of money.
No, exactly. So being targeted, although I imagine just even hearing this, if I were the hacker, I'd be moving those funds to hundreds of addresses.
To make it more difficult.
Yeah, because by the time you can agree which addresses to effectively lock down, the money's already gone from them.
You'd have to make the consensus rule be anything that started in this hot wallet. That's what gets nuked.
Which you could then mix with other stuff, and we know how Bitcoin can be.
It would taint everything.
It would taint everything. It would taint a ton of funds. So it feels like it would be pretty darn hard to get this implemented. So hence my hell no in the world do I think that this would ever pass.
No, but it's an interesting discussion.
It is an interesting discussion.
And someone actually put an interesting twist on it. All you have to do to outsource or crowdfund this process is you simply reveal the private keys to your hot wallet. Just put the private keys out there on the internet.
The private keys to the thieves?
To the hot wallet of Binance. And what that's going to do is any miner who wants to start mining on that chain can then send themselves.
On the new chain that unwound.
Yeah.
That kind of unwound that specific theft.
Yeah, the $40 million.
Right.
As their own prize, right? And then they could just keep running their hash power.
Right.
Until
that is a way to do it, although Binance wouldn't get the money back.
No, Binance would not get the money back.
Yeah, exactly.
But you could then neutralize that transaction and rewind the chain with a good financial incentive.
Yeah, basically bribe the miners with the money that's stolen by taking it from the guy that took the money in the first place.
And then rewind history back to that point and then keep chugging forward.
Yeah. Fasting what you can do in this industry. Yes. Totally true.
It's all theoretical. I don't think anybody would be stupid enough to do it in real life.
I don't think it'll actually happen. But then again, the effort required to do that is actually relatively low. The success rate, it's actually really low. The odds of success are also low, though. Right. So anyone can just suddenly take Bitcoin D, fork it to put in this code and these rules, and put out a tweet or put a Reddit post saying, "By the way, here's my chain. If you follow it, here's what you can get." Odds of success, I'd say pretty low. You'd be kind of a junk coin for quite some time, but it would be an interesting practice.
I've actually heard a theory that is what Bitcoin SV is ultimately going to be.
Is that it's ultimately going to be...
Right. So the theory, and this is just a conspiracy theory, if you want to just tinfoil hat time everybody, that Craig Wright claims to be Satoshi, but he may or may not actually be Satoshi, and even if he is, he may not actually have access to his original coins.
Right.
So by claiming to be Satoshi and starting Bitcoin SV, and now he's in charge of it, one of the things he occasionally mentions on Twitter is, boy, it sure would be nice if the people who lost coins back in the day had a way to get them back.
Which, if you have a whole lot of the hashing power, you could create a soft fork that allows them to be spendable by, say, another private key
yeah, somehow like
Yeah.
if a coin hasn't been touched in more than 10 years, you put in this consensus rule that someone
Yeah.
can come forward and claim it's there. So that therefore, at some point in the future,
Satoshi's
Satoshi,
coins.
i.e. Craig Wright, will step forward and say, oh, all the thousands of Satoshi SV coins that are out there that are in the Satoshi accounts, those are actually mine.
Now the question is, I could say they're mine.
Yeah.
I have about as much claim to them as he would.
Well, that's the thing is what is the consensus rule around this and
Right.
how does he spin it, right?
Yeah.
But the idea is that he might actually be working on this as a long
I'd
con.
like to think even the fans of BSV could see through that one and not give unilateral rights to some of these old coins. Either that or you do it and you tank the price even further of that chain.
So I don't know if it's a long con or it's just an interesting conspiracy theory.
It is an
It's
interesting theory for
it's
sure.
a nice what if kind of scenario.
Yep.
But
Exactly.
actually talking about the tanking of the value of the coin and what this $40 million is actually 2% of what it said Binance's total holdings.
That was what was claimed, I think, in the article, in the Wired article.
So that would make
you
it
mentioned.
about $2 billion that they're holding.
Right. Yeah.
And then the total market cap of Bitcoin is
just broke 100 billion.
$100 billion.
It just broke it again. It's obviously we've been there before. We were at 300 billion when we were at like the 19,000 price tag or so. So, yeah, we just broke 100. I think we're at 108, maybe 109 now.
$6,000, $6,400
Yeah, we're
ish.
at like a 6-month high as of like today. Talking on this Friday Q&A right now. So, why? I don't even want to ask how. It
With
definitely
all this
feels
weird stuff happening. You
Yeah.
wouldn't expect the price to be so high, but whatever.
Yeah, the one thing that feels different about this wave compared to previous waves is I feel like we never, if we end up at least stabilizing here for some time and don't dip back into like the 3,000 or 2,000, we never got to what felt like really, really true, just everyone forgetting Bitcoin and it completely doesn't work and it's a scam kind of feeling that
The
we got in 2015.
capitulation.
That total capitulation of it's like, we're all out of this. This is total garbage. That felt very strong in 2015, like especially in 2015. So it's it almost felt like let's just tank the price in the large traders, and here's an opportunity to get back in now. Like everyone was still building. We didn't have any bubbles in other aspects of crypto, like the talk of like Ethereum in a way kind of reignited. It felt like it reignited crypto back in the 2015, 2016 era. Even though it wasn't Bitcoin, it helped the price of Bitcoin because how do people get in? They buy Bitcoin if they want Ethereum. So it helped reignite the excitement. I don't even talk about ICOs, but there's an aspect of that as well.
Ethereum was an ICO.
Ethereum was an ICO, correct, and then created more ICOs. But without that, we're still seeing a bubbling in crypto that's coming definitely earlier than I would expect. So we'll see whether or not it's long term.
I was hoping for a little bit longer and deeper of a trough here.
Yeah, I was expecting that as well. But
So
we'll see if it's temporary.
people love talking about technical analysis and ascending triangles and all this stuff. I don't really get into that.
Yeah.
But what I do like to do is I like to pull up the 10-year chart or the longest chart you can get, going back as far as you can.
Right.
Put it on a log scale.
Yep.
And what you can see there is a pretty clear trend over the past 6, 7, 8 years of we kind of have this bottom line of growth, which is just kind of going up and up and up. Or however, I don't know how the camera's seeing which hand's right and which one's left.
Think like this, right? Weatherman style. Let's see. Yep. Yeah, there we go. Looking at our image over there. This is the way it would look right if you're looking at the camera.
So there's just a steady rise in the value of Bitcoin on a log scale, which means it's actually an exponential growth. So when I
Right.
tell two people, those two people each tell their two people, and then that kind of a self-sustaining growth causes an exponential curve.
Right.
So on a log scale, that actually makes an exponential look like a straight line.
Correct.
So what you can see is this underlying exponential growth is one person tells another, tells another. And then on top of this straight line, you see bumps, zoop, which are the speculative bubbles.
Right.
That's the tulip mania.
That's
Where
the
it's like,
2013, the 17s, that
yeah, it's just pure
2011s.
speculative frenzy. Everybody gets in, but they're not doing it because they have any reason to be in. It's going up.
It's
therefore
falling.
I'm
Media.
It's going up, therefore I'm going to buy it because it's going to go up, which is kind of the ultimate Ponzi scheme, right? That's
Right.
how Ponzi schemes work. People buy in because they see the value go up, which means more people buy in until eventually it collapses and then deflates,
Right.
which is built on top of this fundamental growth of like people actually using it for stuff.
Right.
So the longer and deeper those troughs are, where you're just kind of riding the actual organic growth, the better the next
cycle
tulip cycle is going to be. So
Yeah.
we're a little soon.
We're a little bit soon.
We're a little soon for a good tulip
So
cycle.
you're saying we're not going to 20x this time. We won't go that high like, compared to last time.
I think we're a little soon for that. Maybe we could get past 20,000 up to 50 or something, but 100 wouldn't surprise me, but I'd say
Let's
that's
see.
ambitious.
20x of 20K would be 400K.
Yeah.
That would be
I don't
pretty
think
ambitious.
we're going to get there. I think 100,000 for this next top of the bull run would be an ambitious target. Maybe we'll get to 50 or 60. That's just my kind of gut guess.
That would still be amazing to see. That would definitely be amazing to see because that's a pretty significant amount of just market cap in general.
Yeah.
Just amount of value entering the space that we hadn't seen before. And the big question I always have for probably the next 2 bull cycles is, when does it start affecting other assets? When do other assets start depreciating as value starts really, really entering crypto?
Right.
And
If the price of crypto exceeds the total asset value of gold, that's
Right.
not a big deal because gold doesn't have that much impact on our economy. But if it starts to equal the value of the dollar,
Right.
that's going to
Like
have some
80
major
trillion, 50,
sloshing
80
around of
yeah. And then at that point, how meaningful is the price of Bitcoin relative to the dollar at that point?
Will you start pricing dollars in terms of Bitcoin?
Will you start pricing Bitcoin and dollars in terms of just goods and realize that it's less relevant to price Bitcoin against the dollar because that starts to become a little bit more squishy, So, yes, weird. Price, exchanges, hacks, regulatory. Let's talk. We didn't even cover all the stuff we want to talk about today. We're pretty much out of time. There goes our half hour. We'll just kind of go with events and kind of where to catch up with us. So coming up next week, probably one of the biggest blockchain weeks of the year in New York, Big Apple. Consensus by CoinDesk. I'll be over there meeting with a handful of different companies. If you happen to be over there as well, feel free to ping me on Telegram. Maybe we'll go grab a drink or bite to eat. And then kicking off Consensus on Saturday, just tomorrow, is a pre-party Crypto Stars with Tatiana Moroz, Naomi Brockwell. We're sponsoring the event as well as Chia Network. So invite people to go check that out. Look for Crypto Stars or hit up Tatiana. She's all over Twitter. You can find her there and get the details of the event. It is free. I think you just might have to RSVP. Hope to see you guys over there. We'll be giving out swag. And after that, the main conference, and I think main conference Monday through Wednesday. Then I'll be back here in San Diego. So thanks a lot, everybody, for tuning in. We'll catch you again next week. I think who's going to be up next week?
Not you.
Not me. I'll be in New York. Our AV guy Kylan over there, he'll be chatting with you guys next week, and we might have maybe I think RJ from QA and support. There's always ton for RJ to say because he's boots on the ground. He knows exactly what people are asking. He should be he is our Q&A, right? Because he's the Q&A of the entire kind of Edge user base. So talk to you guys next week, and
remember, your keys,
Your keys.
your coins.
Not your keys, not your coins. Out.